Good evening, everyone. Welcome to Almir Market Session Recap of 13th of January 2014. Today, my name is Nenad Kerkes Tarantula, and today I will show you new setups. Prior to our webinar, just a couple of questions. Guys, I know that some of you typed email and you need to receive ebook. Ebook will be given to you by the end of the week. Last information I had, and that is how other markets do it. During the week, you need to type emails, and then after the weekends, particularly on Friday, you will receive the copy for you. So don't worry, just go with the flow, type emails of your friends, invite them to our webinars, and you will get a copy of ebook by the end of the week. I think it's Friday. So don't worry, I will speak again with other market staff, but I'm sure they have collected all of your emails, and I'm sure they will send you the ebook. So don't worry at all. Okay, so Yedru, this is the answer to your questions. You will get your ebook by the end of the week. So again, thank you for joining me prior to our session risk disclosure. By proceeding further, you're accepting all the risks associated with Forex market. Okay, so let's see our last recap. Let's see our last recap, how it went for us. I need to say before I start that particularly for me, especially, this was the trade of last week. So New Zealand dollar, which was perfect to trade, and I have even tried to manage the trade for you by our Admiral Market blog and Facebook and Forex Factory. This was the trade of the week. Mixed results, basically. How well, it depends. We will see now. Market plan for euro dollar for last week. I will be quick with this, and then we will proceed with further setups for this day and for tomorrow. Okay, 2-day setup as always. So market plan for euro dollar was to sell around 36.80, 25 pip stop, 25 pip trailing stop, or alternatively buy around 35.15. Buy never came in, but sell, which was our first position and first let's say first positional trade. You see, this is the time of our webinar because we have moved to Central European, Eastern European time zone. Sorry, now it's 7 o'clock of our platform, and this was the time of our webinar. So I wanted to sell around, as we've seen it, 36.80, 25 pip stop. As you know, all of these setups are valid for 2 days. So today, tomorrow, and sometimes possibly the day after tomorrow, but only sometimes. If you see that the currency pair is ranging and it didn't hit long or sell or short, then you can try to exploit one of these setups. But as you know, whichever comes first, this is our primary trade. This position, this is primary trade. Our alternative, that is a secondary trade. But whichever comes first, if this trade, let's say, comes first, then we should trade. If we want, of course, only this trade. If this trade comes first, then we go with this trade. Okay. So that is how you read our market plan and our trade setups. So I wanted to sell around 36.80, but you see the price which I got after our webinar came basically, well, you see, 4 days after. So probably some of you didn't take this setup, but I have tried to write on, and I wrote on Almer Markets blog and Forex Factory, my trade spiders then. Here, you could have entered here, even though I counted on 36.80. We next day we could have sold it here. That was around 36.60. It was 36.57. So we could have sold it here because the price made double top here. Okay, this is a double top. So you know, sometimes you need also to use your common sense, because I always do the analysis pre-fact and prior to any trade. I do this analysis. So you always should try to okay, exploit your common sense. So this was the trade potentially, even though the price has reached 36.80, and then you see now it's 36.45. But well, that happens, and that was 4 days ago. 35.15 never came in for euro dollar. So, and this didn't break to 37.20 where I would like to sell it, but well, mixed. Some guys, some traders took the trade, some didn't take the trade. But as always, you should read always on Admiral Markets blog and Forex Factory website to see if I have any new updates. Cable. Head and shoulders on 4-hour time frame. Now sell around 64.70, 80 with stops, and you see positions which we wanted to have for cable. What we had on cable was this. It was the time of our webinar, and you can see I wanted to sell here 64.70 with stops above 65. And what happened basically is 64.70 came in 2 days after. So, well, yeah, 2 days, even though, let's see, yeah, I know I got it. So it was basically just, yeah, 2 days after. Yeah, I know this was the peak. This was the shooting star. You see, this was the shooting star. 5 o'clock on this platform, it was 4 o'clock our time, 8th of January, this trade kicked in. Sell around this level, you see, and targeting 64.30. So what happened is basically the price got here, 7-8 pips in profit, then it spiked to the upside, but it didn't take our stop because it went only to 64.95, and then you see what happened. Price went to take profit, even though it went 60 pips in profit. But I was stopped with trail stop because I will have a special webinar about trailing stops, and when I use my Camarilla MACD strategies and especially counter trades, I always use trailing stops. And I think I will make a webinar how to use trailing stop, and then I will give you trailing stop indicator. Because to be honest, the last couple of months, especially when I do counter trend trades, those months were very good for me using trail stop. And today I also use trail stop on euro dollar. I gave my advice to use trailing stop, and I ended up with 15 pips of profit. And I saw that a guy, Stefan, I don't know if Stefan is with us now, he got 30 pips from the trade. So, okay, that is self-explanatory, but at the moment we can see how our trade ended up. Well, for me, I sold it here. I went in a loss at the first, but I wasn't stopped out because it clearly said here at the slide, stops above 65. Of course, I used money management. I always advise you to use the script I gave you for money management, because money management is very important when you use big stops, and especially doesn't matter if you use big stops, scalps, whatever, because you need to enter your position not based on target price. You need to enter it based on your stop loss. Don't let other traders, other analysts fool you. I'm always telling you the truth. You always try to enter your trade and lot size according to your stop loss. You don't want to see only profits. You don't base your trade on profits. You based on your risk, and your risk is based on your stop loss. Okay, and I hope that you have got it in your heads. Always, yeah, money management plan, exactly. Always use. Of course, I will give money management. I will make a money management webinar again, because I see that there is a big interest in that webinar. So I will make it again. I will give you again that script, and I will show how to keep your money and make profits. Because if you don't use your risk, if you don't use proper risk, you will burn your account. You cannot trade $1,000 account with one lot. I have got and received many questions that people are asking me how they can make fast money. You cannot be rich only if you're very, very lucky over the night. Okay, you want to stay in the track in this business as long as you can. You can only do that if you follow a right money management plan. Okay, so let's say, now a quick digression from the team. But let's say I have entered here, and for example, I have $10,000 on my account. This is an example, okay? Let's say that this is my entry, and it was my entry on a live account. But for example, let's say I trade with $10,000, okay? Now, I will use my stop loss. I will use my entry based on my stop loss. If I had placed my stop loss, let's say here, sorry, this is phone. Let's say if I used my stop loss, let's say some 60 pips, because it was above 65. If I use my stop loss of 60 pips, I would enter only 0.2 or 0.3 lots on 10,000 account. Okay, because I'm risking 120 or 180 maximum dollars for this trade. So that will be my maximum risk, 0.2 or 0.3, because I used 60 pip stop loss. Okay, and as you can see, this was the entry. It never made to our stop loss. It went some 30 pips in a loss, then it dropped down to hit our target price and our second target price. I was trailing the stop, so I got out a little bit earlier, but it doesn't matter. It was perfect for shorts. Now let's see another setup. It was for Aussie. Well, what we got on Aussie: buy around this level, sell around this level. So what happened is I got this trade on break even. And why? This was the setup. This was our webinar. So I wanted this trade to go long at first, and this was my entry here. As you can see, the trade went some 40 pips, but of course always respect your stop loss. I didn't close it, but immediately when the trade got to break even, I closed it, even though the trade got later some 20 pips in profit. So some of you may have, if they followed the plan, some of you may have got that 20 pips, but I closed the trade on break even, because sometimes I do that when when the first initial reaction is going to hit my stop loss. If that pulls back, I'm closing my entry, my trade on break even. So this trade was closed at break even. Now that was the setup for Aussie, and also sell around 90.35. Well, what happened basically is, yeah, but when did that kick in? It was basically around, well, this was too late. 7 days after the trade is not valid. These setups, as I say, are only valid up to 2 days. So today, tomorrow, and possibly the day after tomorrow. Okay, because they are on 4-hour time frame. And now the winner, killer trade, New Zealand dollar, perfect trade for us last week. Breakout, pullback, continuation at 82.50 playing out. The trade was playing out, and if you remember, I told you if that again pulls back to around 85.50, you can buy it, okay? And what happened is this was the trade with some 55 pip stop loss. Use your money management. What happened is, of course, this was a killer trade. Price went here, so you had multiple chances to go long here, 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 there. And what happened is the price went, it didn't go single pip below 82.50. And what happened is it went 45 pips at the first reaction. Second reaction was 40 pips. Let's say third reaction, it was 82.65. If some of you taking the trade there, only buy setups, even though at last reaction the price went up 20 pips couple of times before proceeding down. But that was a perfect New Zealand dollar. So today what we have in mind is, today we will have again 4 pairs, Euro dollar, Pound dollar, and Aussie and Swissy. We will cover 4 pairs for this session recap. 4 pairs for this session recap. Now, what I see on Euro dollar. Now, as we can see, the Euro dollar is going a bit of sideways. These are support levels. These are resistance levels. But what I see is potential W pattern bullish. It's bullish. It's not M. M is bearish. W is bullish. So this will, I will show you what is W. W is this pattern or this pattern. This is W. This is 1. This is 2. This is 0.3. You go long at the break of 0.2. Okay. So this is W pattern. This is M. This is M. Also 1, 2, 3. You go short at the break of this point. So W and M patterns are common in Forex market. As you can see, I want to see buy if it break out pullback continuation pattern around 36.70. But now also we have a sell breakout pullback continuation around that level because 36.70 is very important level now. I can see that 36.70 is very important level. Now you can see that we had a break of 36.70 to the downside, but I would go long only if this trade goes up, or this price goes above 36.80 and then retest it and go with breakout pullback continuation pattern. If you don't know what breakout pullback continuation pattern is, you know that this is, let's say, 30. I will show you 36.70, and now the price is there, and now it may go like this: break out, okay, pull back, and now at this point, if the price breaks it, it's continuation trade. Now to the downside would be if price goes here, then goes there, and then proceeds there. This will be the point of your sell. Breakout, pullback, continuation. But from this point, I can see that the price had broken through here. But let's see on 1 hour time frame, it's better. Yeah, this was particularly breakout, pullback, and this is continuation trade from here. So now, guys, we have 2 options. It will be good if the price gets back to a bullish stance, especially because NFP came worse than expected, a lot worse. But generally, prior to NFP, the trend was downtrend. Downtrend was for euro dollar. So if results for NFP came a lot better than expected, we would probably see downward price action, but very, very clear downward price action. Now it's a bit of sideways because of that NFP. investors are not sure what to do. They want either to buy or sell dollars. They're not sure. So this is what I see. This is the level, 36.80, 36.70. If the price is below the level, this can be the target, 35.80. As long as the price is below the level, this will be the target. So tomorrow we will see. If the price doesn't go above 36.70, we can see this target. So I will do my intraday analysis to point the exact levels, because we already have breakout pullback continuation here. It looks like it's been playing out. But now, if the price goes above this level, 36.70, then it will target 37.40. It will go for 37.40. So also, if it happens to go above the level, then you go with breakout pullback continuation trade. Okay, breakout pullback continuation trade. Alternatively, on euro dollar, what I see is basically this was the last webinar. We don't do it now. Sell, breakout pullback continuation at another test of the level. But then I would go with very tight stop, very tight, maybe 15-20 points, and go if it will give us a so-called second chance trade. So that is for euro dollar. Now let's move to cable. Now cable is dangerous at the moment. It is in uptrend, I need to say, but if you can see it, it's megaphone on 4 hour, wide range megaphone, expanding top it's called. I call it megaphone. So you need to be very careful for megaphone pattern. Very careful. I don't like the pattern. Although today, if you see my analysis, I will refer to this analysis. I have longed just a bit on the second. This price went here, and then 2 times it tested the level after my analysis. I went here and I let it go. I let it go to test this level, 64.66. And what happened is I was some 30 pips in profit, but I used trail stop and I ended up with 15 pips of profit. But I also told you on Admiral Market website and on my blog, if you read it, trail the stop, okay? And I told you this level here will spike up the price. And indeed, 2 times after the analysis, it spiked up the price. So you could have ended up with 10 to 30 pips of profit intraday if you followed it. And now for all of you who don't know what I'm talking about, this is the blog also where I make posts, daily analysis, GBP dollar, and I will always write as here plus 15 currently, trailing the stop now. And also Spiders Den, and also on Twitter and on Facebook, Admiral Markets, you can read my updates for the trade. Okay? So this is a real-time analysis, and I'm trying to help you with real-time managing the trade if you enter the trade. So what we got in mind is now it's a different situation. Well, you can see megaphone. I don't like this. Expanding top megaphone, wide, very wide range. I don't like it, but what can we do? Only a few of the setups, and those setups now we don't need this. Discard and okay, don't save. Let's see. Okay, this is a cable. Buy around 63.50. This is what I get in mind. 63.50 stops around 63.10, targeting 64.50 or 65. Again, you need to use trailing stop. This is the buying level because it's the bottom of this megaphone pattern, and also it's in confluence with my red level, 63.40. So you can try to buy around 63.50, this level, and go to the upside. We can trail the stop, of course. use your trailing stop after some 15, 20 pips. This is final target. Or if it goes 30, 50 pips, then you can make it break even. But I don't know, I use trailing stop most of the time. Sell around 64.30, stops around 64.70, targeting 63.40. Now, if we don't get a buy chance, we want to sell it higher, of course, because you know how we trade. Sell higher, buy lower. This is the confluence trade. 64.26, let's call it 64.30, and confluence with 50% fib retracement, good number for shorting if it comes there. So whichever comes first, either this or this, whichever comes first, we can try to exploit it. Don't go if there is big news, strong news on cable. Try to enter only if there is a nice movement, particularly not very strong movement prior to your entry. If you see that big news is coming for cable, don't trade it. Or you can trade it, but with lower risk than usual, okay? So buy around 63.50, stops around 63.10, targeting this level, or sell around this level, targeting this, whichever comes first. Aussie situation, we have direct jump pattern. What is direct jump pattern? This is direct jump. You see, no retraced. It went directly to this level and then it started to drop. So this is, you see, 1, 2, 3, 4, 5, 6, 7 bullish candles, no retrace. It's called direct jump pattern. And you can see now what I had in mind. Buy around 90.20, 90.005, stops around 89.80, targeting 90.90, 91.25. So now it's closing to our entry, but I'm not sure if I would enter it now on Aussie because I didn't check. You need to check Forex Factory calendar for upcoming news. I am not sure, it may come later after midnight, so if that's coming, I'm not sure, you need to use again low risk. But it's going very close to level zone, and this was the confluence basically. What I got in mind, this is the first zone. The first zone comes in around here, but the second, this is Aussie, sorry, I went to USD Swissy. So Aussie is closing here. This is the first zone. This is the first zone, I can say, in between this, and this is maybe the better entry if you get in here, because we have top here, we have breakout here, we didn't retest it yet, it's 78.6 and it's also red level confluence. So I would personally like to come here to buy it. I would like the price to come here to buy it. But if it doesn't get there, we can see some 61.8 here, 90.20, so it's 28 pips now from our possible entry, so pay attention to that level. Or if we don't get it, if we get another jump without a retrace, I would try to sell it around 91.25, this level, because of this 1, 2, 3 top, almost 4 tops there, so it should give a resistance at the first attempt. I always call that first chance trade. So first chance trade. Renting. Oh, sorry, just after I finish with the webinar, I will explain everything according again for that ebook. Don't worry, you will get your ebook. Don't worry. I will explain again. So just pay attention now. This is important. This is my probable buy setup, and this is my sell setup. So whichever comes first, now I'm mining price action for this. Okay? And I'm saving you for potentially bad trades, because you don't want to buy here when the price is very high. We want to sell it there and buy there. So you need to be patient to wait for proper setup to kick in. Now, Aussie was in downtrend. But now, as we can see, this is maybe the start of uptrend. That is why I also say I would like the price to test this level, because if it tests the level, it can go again at least to this red level again, and then range a bit and then proceed further with uptrend. So I personally would like to see price there, but there is also here a possible buying zone, 90-20. Let's see what will kick in. And dollar Swissy is in downtrend. We have head and shoulders, 4-hour and M pattern. Both are bearish patterns. Sell it, breakout, pullback continuation. Very clear on Swissy. You can sell it there, breakout, pullback, continuation, especially continuation of this level. If it goes again, if it goes to the downside, it will be breakout, pullback, continuation. So it will be breakout, then pullback, then continuation, possibly breaking through this M. This is M, see M. If it breaks to 9,000, 9000 level, if it breaks through here, I'm counting that the price will again go down, go further down, targeting 89, 85, 250, anywhere there. But you need to place, if you go with 90.15, you need to place stops there. If you go with 9,000, then stops should be 25 pips. Whichever comes first. Breakout, pullback, continuation of this level. So breakout, pullback, continuation, because also you can see this is head and shoulders, this is M, this can be the right shoulder, and anyway this is a neckline. So if it breaks through the neckline and proceeds down, we can see possible some nice 30 to 50 point target. Okay, I will give you the slides again, then so you can print screen, you can print it, and then we can move on to just a little bit of explanation for ebook. Okay, so this is market plan for euro dollar. This is market plan for cable. Market plan for Aussie. And market plan for USD Swissy or Swissy, Swiss franc. I would like to see personally Swissy trade there. Breakout, pullback, continuation, and M pattern. And I can count on some fast 15, 20 pips, because I'm counting that this level will be tested. If it breaks very fast through this level, then we can see even lower. But that would be trade I would like to see also personally. But also we had a potential setups on euro dollar, 4-hour time frame on cable, buy there, sell there. Aussie also, I would like to see a long trade there, and Swissy breakout, pullback, continuation if it happens. So how we do it? We don't enter randomly. We are patient and we always wait for the right setup to kick in. Now, concerning your ebook, guys, you just go there. Education, then webinars. Sign up for any of these webinars. Let's say you want to sign up for 14 of that is tomorrow, supply and demand trading with Chris. Then you press sign up, and then today is Monday, tomorrow is Tuesday. Okay, you need to fill in, of course, first name, last name, whatever. What is your trading experience? And then, in case a friend invited you, please insert his or her full name. Otherwise, leave this field blank. To invite your friends to webinars, simply type in their emails. Once they attend the webinar, this is important. Once they attend the webinar, you will receive a gift. So if your friends attended the webinar and you tell them they should attend the webinar, then you will be given a free ebook until Friday. I think that you should receive your ebooks on Friday, okay? But you see, once they attend the webinar, so it's not simple enough to enter your email address. They should be on this webinar, or on whatever webinar we have. So if they attend the webinar, you will receive ebook. I'm telling you, that ebook is very good. I have also personally entered some of good and useful info in the book, and it is very well written. It looks very well. It's in according to Admiral Market colors. Everything is aligned with Admiral Markets. So you will get ebook. It's great gift to you. You can read it. You can print it. You can use it. And you will be, I'm assuring you, you will be happy, very satisfied. But again, it's not enough just to enter 3 mails. Your friends need to attend the webinar, okay? So probably that is, they need to attend the webinar. And you need to get your ebook, and I'm sure they will send you, Admiral Markets will send you ebook until Friday. I think that Friday is the day when Admiral Markets sends you the book, okay? So these was our setups, nice setups for Euro, Dollar, Cable, Aussie, Swissy. Of course, follow Spiders Den. You can follow also Worldwide Investment, but basically I'm more active on Spiders Den, but also here. And of course, Admiral Markets blog. These are daily updates. I don't know, maybe I will do tomorrow with analysis for Euro, Australian dollar, whatever pair I see interesting, I will do. So I won't stick just to Euro, as I promised. Sometimes you will be given, as in this day, cable and Euro dollar analysis and NFP analysis. So read also our blog. And you see, you know the trade I took after NFP. I showed it basically on Facebook and on Spiders Den. It was a great sell, a great sell. You probably saw it. This was great. A trade, one of those trades, which was good. So always try to read, and this was the trade of NFP. We had a nice sell there, and if you know what you see next POC comes around 36.90, and exactly at 36.87 we could get a sell trade, okay? So I always post the analysis pre-fact. I never do this analysis after the price hit and then go in that direction. I always do this prior to any entry, prior to any given price action hit. So you can always use it to your advantage. And this trade particularly, it came in very nicely on NFP around 36.87. I was in 36.80. I was in 36.80, and you see the price, it was 36.76 at the time when I wrote it, and then it was basically 36.87, 4 pips, 3 pips short of the level I gave. Okay, USD CAD, yeah, USD CAD, well guys, for USD CAD, nothing at the moment. I need to chart it, I need to see it. Possibly, if I see a nice setup for USD CAD, I will be, feel free to read tomorrow. I will write it down now, and early morning, maybe around 10, I don't know, it is 10 GMT or 9 AM GMT, I will post analysis for dollar CAD, okay? I will write it down now. I will do that. So read it, you will read it here, Unreal Markets or Spiders Den or Spiders Den Worldwide Investment Edition. So anywhere you will read it. Okay, there, and of course on Unreal Markets blog and on Facebook. Now I will write it down. I won't forget it. Okay? So guys, thanks for attending the webinar. Always come here because I want you to make money. I don't want you to lose the money, and I'm really trying to help you to get the money by trading. Also, if you know what I do on under education, you will read a lot here. Chaos theory, basic. I will give you basic chaos trading system. I will give you, so you will learn about Bill Williams, chaos theory. Then, of course, scalping the Forex market part 2, you will learn a lot. Feel free to browse, feel free to comment, to visit our blogs, our sites, and our webinars. So this was session recap for today, and I wish you many green pips, and as always, be very, very cautious when you trade, because you want to use proper money management. Proper money management is done by calculating your entry and your stop loss and your equity. I will again make a webinar about money management and show you and give you that script again from that you can use it to your advantage, and that will give you proper risk size. Okay? So thank you very much again. Green pips to you, and stay safe. Bye bye. Talk to you soon. Thank you guys.